Hey everyone, welcome back. Today we are looking at Polestar. I've been away for some time, but I am back. We've got some fresh content, of course. I've written a few articles in the past week, and I'd like to just share the updates. It's been crazy. A lot of things have been happening with Polestar. So we want to start with the share price of Polestar, of course. It's $3.30, absolutely cheap right now. The market is completely closed, of course, but I haven't had a chance to talk about this except for Twitter. Follow me on Twitter, by the way. Link is in the description. Check it out. But this is wild, to be honest. It is kind of wild. So what's important in this video is to understand why people should not panic when the market is crashing. When your favorite share, like Polestar, is crashing, why shouldn't you panic? I've just been seeing a lot of people panicking constantly. And this does need to be addressed because it's kind of unnecessary right now. So I've spoken about this on Twitter. I'd like to share with you some of the reasons why I believe you should not panic. First thing that we have to have a look at is this, of course. So let's get this out of the way. The market cap of Polestar, it's extremely low at the moment, of course. The market cap is less than $7 billion, $7 billion US dollars. That's ridiculous. I do believe that we IPO'd around 20 billion to 25 billion. So that's quite significant, and it's fallen off quite significantly. But let's just get something out of the way. I don't know of another company that is Swedish and fully electric. On this list that we've got of electric vehicle market cap, I can't find another one that's Swedish. Got a lot of American companies, Chinese companies, one Canadian company that I can find, company in Israel, company in Germany, but majority of these companies are USA-based companies and China companies. So it's not just Polestar, of course. Rivian has taken a huge hit in this market. Not just Rivian, but I think quite a few different shares, such as Lucid as well. But of course, Lucid has been affected for quite some time. It's been quite a while since Lucid has been affected. NIO is also being affected. So I think it's fair to say that the entire EV market is in a downward trend line at the moment. It is. You can clearly see. So first thing to understand, it is not just Polestar. It's a lot of companies that are really going down at the moment. You know, if you look across the board, such as Fisker, take a look at Li Motors, NIO, take a look at Rivian, Tesla, even Tesla. But of course, Tesla's being affected quite differently because it's such a huge company with such a huge market cap. And this market trend doesn't seem to be Tesla's fault. You know, it's not Tesla that started this. I think investment in electric vehicle companies are just down. It's on a downward trend at the moment. Perhaps it is due to the influence of AI. Here's the thing. When investors find something new to invest in, they tend to do it quite instantly. You know, if there's a new area that's garnering a lot of attention, like AI, that area tends to do extremely well, while another area could be affected. Investors will quickly take their money out of these shares and put them somewhere else. And it's just a standard practice. So some of the latest news in the Polestar ecosystem, the Polestar 2 BST Special Edition, this is a 230 edition. It's going on sale for £74,000. That's about $80,000 US dollars at least. Not to mention the Polestar 3 has had a price cut in China. I will make a video about that. It's going to be interesting. The Polestar 3, Polestar 4, and Polestar 5 are all doing a winter testing, or they've already done that, and the CEO of Polestar shared some pictures, thankfully. The Polestar 2 is said to be the most popular EV company car in Germany. And this, I believe, was garnered by LeasePlan. I wrote an entire article about this. I will make a video on this to dive into some more details. But on the top 10 of company car, these are the preferences. Polestar is number 10. That's just beyond the Golf variant Volkswagen. But these are the other competition. I'd say that is pretty darn impressive. So those are some of the updates that I haven't really spoken about. Now, I've personally been buying the share because it's undervalued. It's still a great company. I still find that there's a lot of value, and I've always wanted to buy the Polestar share when it's this cheap. That's always been part of my mission plan. But let me just say, this video is not financial advice, so please do not take it as financial advice. It's just my personal opinion. But I'm also really interested in Rivian as well, because Rivian do have a lot of potential. They built 20,000 cars last year. They could double that this year, if not build 50,000. So to go from 0 to 20,000 is still quite impressive for a new company. So these are some of the tweets that I shared on Twitter. Just share my own personal opinion. What's my personal trajectory for Polestar in the next 5 years? I believe we must give the company a chance to do what they set out to accomplish. Now that's releasing the Polestar 3 SUV, the Polestar 4 crossover, Polestar 5, that's the GT sedan, and the Polestar 6 Roadster. And building 250k cars annually. Now that will be accomplished possibly around 2026, 2027. That's 4 to 5 years away. Only then we will know if it's a success. So by 2026, 2027, PSNY will gain the market share and the trust it needs. In the current market that we're in, the simple fact is that companies with low cap, such as Polestar, they usually have the larger effect of the market. They usually have the harshest time in the market because they get affected much greater than larger companies like Tesla. Throughout all of these EV companies, the one that's having the easiest time is possibly Tesla. And that's no accident. Keep that in mind. That is no accident. Tesla's gotten to this position by seriously hard work. Seriously, it hasn't been easy. Additionally, I had to say, in terms of the share, I'm buying 100%. It's $3.25 approximately, and that's too good to be true at least. Market cap, less than 7 billion, and that's undervalued when you consider the growing revenue that's taken into account. Now, I do address the manufacturing inefficiency. There is a lot of inefficiency in EV manufacturing today. The only company that seems to be doing this extremely efficiently is Tesla, but they've taken literally a decade to achieve this rate of efficiency. It is not easy. So I also added that the support and leadership is astonishing in Polestar, and I'm confident that they can improve on the efficiency long term. That's what's key. When Tesla started out, they struggled with very similar things to what Polestar is struggling with right now. There's very little differences. In fact, I remember it being a lot worse when Tesla started. Almost everyone in the media said that Tesla was going to fail. Every day there was new articles being written why Tesla will fail. And I feel like right now it just feels like everyone has forgotten that everyone in the media, almost everyone in the media, completely wrote Tesla off. And they were just constantly talking about how the company would fail. So if Tesla can go from that to being the absolute success that they can be right now, I don't see why Volvo cannot transition their company. And I don't see why Polestar can become this luxurious electric car vehicle company that they sought out to be. Of course they can. It's just that these things, it does take time. I did not know I could do this with my camera. Look at that. I can make that larger or I can make it smaller. That's remarkable. But essentially, I don't think that people should be panicking as much as they are because this is normal in the market. There's a market crash, one particular share being affected more than others. We've seen this happen before. I also wrote a quick tweet just saying, is it time for Volvo, Polestar, and Geely to do a share price back? Or should they wait until the market cap hit below 5 billion, I would say? Because it's currently below 7 billion, and that's as cheap as you can imagine. But should they do a buyback right about now? I don't know, but companies do tend to do this quite a lot. When the share price is cheap, they tend to take out a new loan and they do a share buyback because it is obvious that the company is seriously undervalued. So if there's a time to put some momentum into the company, into the share price, this could be it. I also had to add that a Polestar update says for real. Has the underlying business, strategy, or product had any loss? No. And I agree, I said nope. Nothing as far as I can see. They announced earlier this year that they expect to build 80k vehicles this year. That's a 60% increase. Okay, it's not 100k, but it's safe to say that that's a 2024 target. Late last year, they gained further funding from Volvo and Geely of 1.6 billion. So the business is still on trajectory. It's just that a lot of people who've invested are panicking and I think it's just blown out of proportion by a lot. But that is it for this video. Thank you for watching. Send me a welcome back comment, please, because I'm back on the channel. We'll be making more videos more often. But I hope you enjoyed this video. Thank you for watching, and I'll see you in our next video.